Fascinating note today out of you as you reiterate and look for 247. You say yesterday was compelling in part because expectations were a bit muted?
That's right. Expectations were low into the event, but it's also important to realize that iPhone replacement cycles have lengthened from 2 years to 4 years. And what that sets up for is an installed base that is primed for upgrades. And there were a number of surprises yesterday. The entry price point for iPhone 11 and the older iPhone models are more affordable versus last cycle. As you mentioned, Apple is bundling TV Plus, which is a $60 value with the purchase of new devices. And most important, the step function improvements in battery life and camera functionality are important to driving upgrades because this is what consumers say matter to them when they think about replacing their smartphone.
So you think this is, I mean, people have been looking for a bridge, so to speak, between where we are now and whatever 5G is going to deliver in a year. You think this is it?
We believe this is it. We see iPhone growth continuing to improve off the March lows. We see services growth already accelerating. We published on that last week that App Store growth is surpassing our expectations this quarter. That's before any of the new services that were announced in March come into the model. And we also believe that the multiple will expand ahead of 5G. That happened ahead of the iPhone 6 and ahead of iPhone 10. But also as services mix continues to grow and as investors start thinking about the fact that Apple is yielding 9% between dividend and buybacks, which becomes more compelling in a low interest rate environment.
Katy, I think the expectations ahead of yesterday's event were pretty low, and Apple certainly over-delivered relative to those. A lot of information, a lot of details, a lot of headlines. Was there anything, though, that disappointed you or that you wanted to see more of?
I think some investors wanted to see more features out of perhaps the watch and some of the other products. But you have to remember, this time of the year, Apple is replenishing or refreshing many of their products, and they have to pick and choose where to focus. And we think they focus their efforts in the right places. As you know, iPhone revenues have been declining, whereas wearables revenue has been growing very fast, over 50% last quarter. And so focusing the upgrade on the iPhone around features and price points and bundling was the right strategy in our view.
Katy, I'm curious about China, which remains an important market for Apple. The lack of a 5G phone and the fact that their competitors have one in that market and that China is moving very aggressively to implement 5G. Does that pose a problem for Apple in the coming year?
It's a good question. 5G networks need to be built out before consumers can see the benefit. And we believe that Apple's launch of 5G will align with the time when the network capability is in place. We've actually been very surprised by the strength of Apple's business in China. The improvement in App Store that we talked about last week, part of that is coming from China. The Apple data out of the China government in the month of July improved materially. And we also continue to see Apple taking share of the active installed base of phones in China. So the data is moving in the right direction, whereas many investors and ourselves were concerned that the trade dialogue would start to impact demand, and that's just not happening in China.
You've written, and it was a while ago now that you wrote that wearables and services would account for most, if not all, of the growth going forward. How low can iPhone get as a percentage of overall sales before it gets worrisome?
Sure. So iPhone is, used to be, closer, north of 60% of the business. It's now closer to 50% of the business. At the same time, look at gross profits. Services back in 2012 accounted for about 9% of gross profits. It's now 30%. We believe it will become close to 50% of gross profits over the next year. So that evolution in the drivers of growth and the drivers of profit is in play at Apple. And during that evolution, we've already seen 4 points of PE multiple expansion. And we believe there will be another roughly 3 points of multiple expansion the next year as that evolution continues, as investors anticipate the 5G cycle, and as Apple starts to attract new investors on the back of that 9% yield I talked about.
Katy, how should we think about pricing here? Obviously, a lot of attention on the fact that this new iPhone 11 is priced about $50 lower than its predecessor, and you saw cuts on previous models as well. But given the fact that we're seeing this strong dollar, especially relative to so many currencies around the world right now, how do those price cuts play out in other markets, and what does that mean for demand?
The good news is that Apple showed a willingness to be flexible on price. If you remember, Apple lowered the price of the XR in China in January and followed that up with price cuts on other products in the month of March earlier this year. And so we expect the company to continue to monitor currency and adjust pricing where it makes sense.